Good morning, good people. Um, Welcome to the final weekly meeting of 2020. Oh, 2 days left. I think Monday and Tuesday are the last 2 days. So I really kind of just want to look at some directional trades that I believe are going to be upon us. We've been like very successful, especially at the start of the year in understanding the direction. Uh, you know, if we keep doing it like this, then it's only going to be to our benefit, because if you know the direction and you trade in that direction, uh, you know, the odds are you will make money, right? Even if you don't trade it properly in that direction, like I did not trade UJ properly for the buy last year. I got paid a lot of money, but I should have got paid a whole lot more. And truth be told, those of us who were on this call and decided to take that JPY trade at the beginning of January, we should not have suffered any losses. Until we could have held that trade basically from January through June or July, and we would have only had profit, and it would have erased any losses that you may have taken in the first 6 months of your trading. So uh, that is my thought process going into this year. Like, this is not the first time that we've looked at these charts, nor will it be the last time. But my hope is that this will help you continue to grow and become better as a trader, right? And I know for me, this is it. This it always means the most when these higher time frame charts close. 3 month is as high as I'm going for my intents and purposes, but I encourage you to look at the 6 month, look at the 1 year for your personal use, maybe. But in my opinion, I think this 3 month will give you all the edge that you need. Now, I want to start with the futures, which is everything versus the dollar, because um, it's relevant, right? Everything has been falling. Or at least we'll just look. I'm not going to say everything, but in this case, we're looking at the Australian dollar versus the US dollar. We have the strong bearish candle, gives you a bearish 3 month order block. If I fib this order block, I get my zone, my 78. And I see that there's a great distance that it needs to travel back to my zone, right? And even though futures doesn't calculate versus on pips, it calculates on ticks. To me, it's all the same, right? There's a high likelihood that we could run this wick, this low right here, before we push back up. We have 2 days of action left. There's relatively no wick on this candle. So maybe we don't run that high and we just start pulling back. Or the second possibility is I said run the high, I mean run this low. The second possibility is to run this low and then start pulling back where we would have wicked it. And then we expect price to keep pushing up. So that means AU would be a buy according to this particular chart setup. This is the British pound, US dollar. It's very close. I would like to see this close as a bearish order block, but it may not. If it does, we can trade this back up to the zone and then expect a sell once it gets there. Or, even if it doesn't close as a bearish order block, if it closes, or you look at this as a bullish order block first and we just tapping into the bullish order block, then you want to buy this either way. The difference is some people are just going to buy this and hold this back to the 50%. The ones that believe that this is just a tap in to buy, they will buy it and hold it for a greater distance. And what I would do if I were looking at it that way, I would fib from the top to the bottom, and I would look to where my golden zone was, and maybe your 78. So you can see imbalances along the way in this chart. I don't know if that's the imbalance on this level, but I know it's an imbalance on a higher level or on a lower time frame. So if that's the way you're looking at it, kudos to you. And you have a trading plan that would take you from where it is now, up at least to the 50%. All right. Euro futures. Again, same story. It's going to buy against the dollar. We have a bearish 3-month order block, or you see this as a push down to grab the liquidity from the bottom of the market before we turn up. However you see it, that's the way you see it. I applaud you for seeing it. But I would look for price to start pushing up, right? And if you believe that this is going to break these highs and keep going higher, obviously you're going to fib from this move to this move and get your golden zone in your 78. Or you can take the safe route, fib this candle, and trade it back to the golden zone of this move. Either way, that's still a lot of pips, right? We're looking at probably 500 to 700 pips on all of these trades. If that's the case, it could get you started for the new year. All right, here's Japanese futures. We had a bullish order block. This current 3-month candle with 3 days left tapped into that bullish order block. If we don't violate the bottom, you can look at this as a buy up probably to this area. It's kind of the way I'm biased. But, I know everybody sees these JPYs a little bit different. So however you see it, if you just want to trade halfway back up this candle, that's cool too. It's still a lot of pips. But I think there's huge opportunity in trading or in understanding the long range direction when you start trading, because if you understand and you stick to your guns, let's say we saw this bearish order block, this candle went up and pushed back down. This next candle, you probably could have assumed was going to start the down move because you got this feeble candle next to it, right? But if you would have been trading down, of course, you'd have reaped all kinds of benefits. So similarly, these order blocks on these various pairs that we've looked at, it gives you directional bias, and you can trade accordingly that direction until it gets to a zone of your choosing, right? And if that zone is 50% of the current candle, that's 50%. It's still a lot of pips until you get to that 50% mark. All right, New Zealand dollar, US dollar, same song here. Bearish order block, trade back to the 50%, or maybe you're biased and you think that this price came down and it's going to turn around. However you see it, again, I think it all is going to start with the buy up. And perhaps you could, when you drop down to lower time frames, which we will do a little bit later, we'll find some liquidity, whether it's an imbalance, whether it's a low that we need for price to hit before we expect it to turn and burn. And we can talk a little bit more about that here shortly. Okay, Swiss franc, US dollar, bearish order block. If you're trading USD CHF, which I rarely ever do, but I think this is going to pull back, and then I would think that it's probably going to sell from here. I don't know. I'm not trading this trash. But if you are, there's another order block. Depending on how it closes, you can kind of expect, or you have your expectations based off of these order blocks. Now, these are futures, right? Everything versus the US dollar. But it kind of sets the tone as you start looking at the new year, this sets up, to me, a lot of easy trades, right? And as a trader, um, I'm hollering at the easy girl. I want the easy option, right? It's 3 a.m. The club's gonna close. Give me the easy option, um, because I don't want to argue. I don't want to fight. If I'm trying to rob somebody, I want to rob the little kid. I don't want to rob the grown man. I want to rob the person without the gun. I don't want to rob the person that's gunned up. Um, I want the easy move. Okay. Um, with that being said, we saw how the US dollar stacked up against uh, the British pound. So now I want to look at the Forex chart, um, and we'll kind of see the same thing. The British pound, this could end as a bearish order block, or if you see this as this being a bullish order block and this tapping into that order block, then you're going to see this as buying up. Either way is fine with me. Let's just look at the first option, the easy option. If I just measure the red candle, it's pretty easy. This is my golden zone. This green line is my 78. I'm going to delete my fib just so I can get me a small pip count. All right. If this thing goes back up to the middle of the golden zone, that's 429 pips. If it goes up to the 65%, that's about a 500 pip trade. I'm going to go ahead and drop to the 4-hour chart because I want to see the imbalance. I trade to imbalances or liquidities in my zone. So when I get to this 4-hour chart, if it comes here, I know it's at least going to take out this high. So I think I can trade from where it is now to this high at least. There's another high. But to me, the more interesting thing is this imbalance at my 78. So me personally, I'm going to look at this as a trade that I could take from where it is now to the 78%, right? Where it is now to the 78%. For me, I have available 634 pips, okay? The thing that I like about this trade is I have a bullish order block on the daily, which means a pullback to the zone and a buy up, right? So it's creating the wick. This is creating the wick of that candle. Maybe on New Year's Day or the day after New Year's, maybe we get a pullback to go higher, right? We just call that a chalk where I came from. But to me, I have a chalk right here that I would be comfortable getting in. So if this pulls back and I'm on a trade GU, I'm getting in on this particular pullback. I don't have to get in with no heavy lots. I can get in conservatively. I can put my stop loss here because I have many opportunities to add, right? And I can hold this through the little holiday. They close the market. And then if I want to get in for a bigger lot size after that, then I can always scale into the trade, right? This keeps you out of over leveraging or getting in trouble because you're getting into the move so early. A lot of times as a young trader, you're too eager, you're overzealous, and you get into the trade with a huge lot size, and then it gyrates and goes sideways, and it kills your confidence and your account. But this way, if you're listening, then you'll understand you have plenty of time. I just showed you a 634 pip difference. Plenty of time to size up, scale up, flip up, all that stuff, right? But it all starts with you believing in the trade. If you don't believe in the trade, don't take it. We'll make more. Don't take the trade if you don't believe in it. But in my opinion, it's a great trade setup. It's not a good one. It's a great one. All right. So basically, you do the same thing for all of these. I'm not going to do every one, dude. I mean, you know, I just ain't gonna do it for you, you know. But trust me, if you do it and you mark up your chart accordingly, and you drop down, the way I do it, I like dropping down to the 4 hour because that's where my imbalances show themselves, right? Um, and this imbalance is about 65. Okay, so I could trade this 500 pips if it comes back to this area is 500 pips. But if not, I could trade it basically here, and then I would look to start selling. Or if you don't believe in the sell, maybe you just look for it to pull back to keep buying up, right? And I get it. It shouldn't just be an automatic sell, right? There are going to be fundamental things that come into play. We got a new president. We'll have different policies, and maybe the dollar will become a little weaker. I think that Trump, generally speaking, favors a weaker dollar over a stronger dollar. So if that stuff starts to bear itself out, then you just look for a pullback and you look for a continuation up. Okay. Ooh, UJ, you Jizzy Wizzy. Okay, UJ is right on the cusp, man. We got a couple of days. I believe we're going higher. We got 433 pips to violate the high. I personally don't think we're violating the high. I do think that we can come up to this breaker block, which is about halfway up this imbalance. The JPYs have been serving up some good meals going north the last couple of days. So it's about 253 pips. So if you're taking this up, this one, GJ, any of those JPYs, I'm not going to say any JPY, but this and GJ, I think we got a couple hundred pips that we can ride up before we get to that sweet spot. However you see this, and again, this 3-month candle is not closed, so we have to take that with a grain of salt. But as long as we don't violate and close above that top, I believe that we'll be sweeping back down to the bottom, right? But even if we do, even if we close as a bullish order block, then you just fib this green candle, trade it halfway down, and then play it to get stronger. However you see it, if you like it, I love it. I think there is plenty of opportunity. I've been talking about this USD Mexican trade. So far, so good, right? We didn't knock the top off this order block, right? So if everything stays the way it is, and it seems like it might want to, then I would just look to trade price back down, which I've always suspected, but we just have to kind of wait this out. I'm not willing to put any money on it at this point, but I would look for a bearish order block on this daily chart before I even look to get active in this trade. And I'm going to look for, either right before the holiday or just after the holiday. But I think this trade is probably going to pan out because we got off that high. I was kind of nervous at first, but this trade will still be a very important trade for me if the dollar doesn't violate that high. All right, EAGA. Okay, We got a nice little run up on this EA candle. So what I like about these euro and British pound um, AUD candles is the pip count, right? This is 832. I believe the other one is like 1,000. Uh, this is a little over 1,000. So I would fib this, both of those candles. You're going to get a zone, you're going to get your 78. I would target the pullback. If you drop down into your zone, you're going to see plenty of imbalance. So if you get your sell signal, that's 567 pips to the imbalance. If it goes halfway, about 600 pips, call it 600 pips down into this area. Again, these are basically relatively easy trades. This imbalance is at the 78. It is not at your golden zone, but you have basically double bottom right here that you can target. I think these are easy directional trades that you can take without having to overthink or over push for your results. This I would do the same way. 1,369 pips. Get your zone, mark it up, trade back, trade it back to your zone. Got a little imbalance here. Got a little imbalance here. Both of those are in your zone. $700 pip trade. To me, these are pretty good, pretty easy, pretty simple. Elfie, what did you say? What other trade did you want to see? You want an EA and what?
EJ, please. EJ and GA. So you just showed GA, but EJ. Euro JPY, please.
It's the same, man. It's the same. This ain't no different, girl. All right, this is easier than the other one. Bearish OB, tap into your zone, drop it like it's hot. I would just if this goes up 200 pips, we could take the top off this high. It would have been great if price would have came 400 or 500 pips up, but any liquidity will probably do. If those other ones go 200 pips and this goes 200 pips, you might be able to target this high. But I don't see anything different from this trade than the rest of them. When the new candle starts, especially if you're up towards that high, maybe you go and you wick the top of that candle and then you're going to sell. Long range, I think all the JPYs are going to push down. I don't see anything that changes my mind on any of these candles. When you look at these candles, they're kind of incomplete, but when you go down to the 1 month bearish order block, we never came back, bearish order block. I would just look for this stuff to keep melting. I think everybody has to you got to stick by your guns, so to speak. I would encourage people to trade the easy trade, right? The trade that you see the easiest is a trade that's going to pay you the most, right? It's the trade that you're going to have confidence in, and it's a trade that you will execute properly, right? Because you already understand what needs to happen, right? Like if I'm trading NZD USD, first of all, I need to have an area that I could target, right? So price is here. So maybe I'm telling myself that this low, right, the wick of that candle low is the protected zone or the area that I don't want to see broke, or this might be the liquidity. So here in the coming week, before I get in for a buy, I might want to see a wick break below this area and start to buy up. And then I'm comfortable with the buy. Others people might say, hey man, this is a double bottom. If I get a double bottom and then I get a bullish order block and it pulls back, I'm getting in for the buy. Whatever your entry method is, or your requirements for a trade, it needs to be hit. And I don't know your requirements, right? For me, I like to see a change of character, market structure shift on the 1 hour time frame, right? So for me, price comes down, it makes a high, pulls back, you break that high. So if I'm trading this particular pair, when we break that high, that's a market structure shift. Then it pulls back. You could have got in right here at the 78. You could have protected this low, and this trade will be holding up so far. So it just depends on you as a trader. And sometimes your rules, you have to understand your rules. When you first start trading, you have to be very strict with your rules. But as you trade for, you gain a little experience, then you kind of have a better understanding of the spirit of your rule versus just being a hard, stringent rule, right? So sometimes the rule itself will be violated, but the spirit of the rule will not, right? So if you have a bearish order block and price needs to buy back up, and you get into this trade and then you get wicked out of it, your trade got killed, but that doesn't mean that the market is not going up. Maybe you got in prematurely. Maybe you were liquidity. You didn't wait until you saw the liquidity grab before it went out the opposite direction. So, in my opinion, I'm looking at these trade opportunities, especially this directional trade opportunity, as a way to build big time. Like, I'm going to make a lot of money over the next couple of weeks, especially because these trades are going in that direction. So whether you hold it for 1,500 pips or you just get 500 pips, I'm going to make a lot of money in the 500 pip move. And if we hold it past there to the 1,500 pip move for those trades that might go 1,500 pips, that's bonus or that's extra. But I don't need to throw 30 lots on it the first day. I have to walk into the trade. I got to throw a little bit at the trade and let it marinate, and throw a little bit more at the trade, let it marinate. I bring this up because I got into a trade last week. EURCAD, right? So EURCAD, I'm selling this. Price bought back up. It hit my zone, right? I got the bearish order block. I had my zone marked up. In my zone, it gave me a bearish order block. I got in. Trade pushed down, came back up, and the trade has been pushing up. Somewhere around this area, I hedged the trade, right? And now the trade is up here. The spirit of the trade is not broken. I mean, look at there's imbalance way up here. So next week, it could push a little bit higher. It could take the liquidity from the top wicks of the order block that triggered me into getting in the trade. But experience has told me, hey, man, hedge your trade, let it fizzle out. This trade, even though it gave me my entry signal on the 18th, it might not move until the 1st. And sure enough, here we are around the 1st. So this is not going anywhere until that time. It's time to move around the 1st. So at that point, it starts pushing down. I can take my buy hedge off of it. I'm a little bit in profit, but the point is, it didn't leave like I thought it was going to leave when it gave me the signal. Gave me the signal. The next day, it pulls up. You get in the trade. You're in profit. Now you're not. Now you are. Hedge it and wait. Like, my experience tells me, hey, man, at the end of the month, it'll do what it's supposed to do. And when I look at this monthly candle, dang, it tapped in. It's just bull crapping into this next candle. The next candle might buy up, take out the liquidity, and then drop. No harm, no foul. I got my trading signal off the monthly. It gave me my entry on the daily, right? An inexperienced me gets in too heavy, I blow my account, or it scares me out of the trade. The experienced me says, throw your hedge in. It's probably going to move at the end of the month. So this will pan out and will pay out the same way it would have if I had just waited until the end of the month. But it's just a little experience that told me, hey, man, be patient. Without that experience, that's a loss. Any questions?
Todd, I was going to ask you because I did EuroCAD on the weekly analysis. And from the bigger picture, I think I still see it. I thought I still see it buying because it hasn't really broken.
I don't mind that. I don't mind that at all. I think that
No, I mean past that high that you're talking about.
I get it.
Oh, okay.
There are two sides, and two schools of thought to every trade. It could buy up here. Some people will have this buying. This is a 3-month chart. Some people have it buying and just keep going straight up. If I lose this trade, I'm fine with that. It's a loss, right? I don't have a problem with that. I think that that we could trade back down and take out these lows on the 1 month, right? So we tapped in, right? We tapped in and we made equal lows right here. We took the liquidity from here. Now we came back up. If we close this imbalance and we push back down, we're going to take out these lows. So there's more than one way to look at it. You can look at it as the market pushed up, breaking these highs, and we need to pull back to this area to go higher. Or you can look at this market going to push up, challenge these highs, and then sell back down to this imbalance to go higher. I mean, I think that there are 2 or 3 different ways. It's kind of like the UJ trade or any of the JPY trades or any of those other trades. There are 2 sides to every trade. So everybody is going to see the market the way they see it. All I'm saying is your triggers need to be based on your, something solid, something that you see happening. For instance, this push down, it came up, it gave me a bearish order block in my zone. That's a trigger. I take the trade, it doesn't push down. This imbalance is all that needs to be closed for me. So if this trade pushes up and we pass that imbalance, then maybe I can just close it out. I have a little equity. All I lost was time, but it would have to violate this high for me to change my mind on it. Without it violating this high, for me, this is the swing and this is the swing. The trade is in the middle. So it's either going to drop like I believe it will, or to continue to push. And I can see what you're saying, but even to me, you're saying that this green candle, we're just going to get a new candle that's just going to keep pushing up. I don't believe that at all. Even if this thing pulls back halfway down the green candle, I measure this green candle wick to wick, 339 pips. If it pulls back halfway, I win. I need 100 pips. That makes sense?
Yep.
And I think that's the difference between somebody who understands what they need and somebody who's just trading because I trade that way. 100 pips, it will do hella damage. So I'm interested in a trade that's going to give me 100 pips. I personally think that we're going down. But as long as I get 100 pips, I'm totally cool with it. I'm totally cool with it. Y'all understand that? Or am I confusing people? This is very important.
We got you.
Okay. Because I think that understanding your trade setup and how you can take advantage of it is step number 1. Now, trading in a direction, maybe you're trading 100 pips at a time in a direction, or you're trading that entire move. Those are maybe a little bit different philosophy, but for me, 100 pips. 100 pips will give me everything I need. Now, I do want the trade to go more than 100 pips, but if I get 100 pips, I'm great. Any questions?
You have to make them understand 100 pips in a week or in a trade setup. Which one are you talking about?
I'm talking about 100 pips. 100 pips. If y'all listen to me, y'all understand that as a trader, we don't control how long it takes for that trade to happen. We only control our entry into that trade and our take profit and our stop loss. That's it. So, listen, I'll be the first to tell you, I want to get paid my 100 pips in the first day, but it just doesn't work like that. There are some trades you can get paid 100 pips in the first hour. For those of you who traded that JPY drop over the summer, y'all remember when the JPYs fell out the sky? A few of us were on those midnight calls. Those things dropped 300 pips in a matter of, I want to say, an hour and a half. Those are great, but the reality is all you can do is highlight your setup, right? And this chart we're on is a 3-month chart, but it could drop 180 pips and then pull back 160 pips and then drop 200 pips and then pull back 200 pips. It's going to be several 100-pip moves in this thing matriculating to the spot that it needs to matriculate in. All I'm trying to do is set the stage, right? To set up the trade so you can possibly trade in that direction. If you notice, USD CAD, we hit this high on the 18th of December, at the same point that other trade, the EUR CAD trade hit. Everything else has been sideways. It's traded sideways since then. We haven't broke that high, but we traded sideways. For me, that's the market is telling me it wants to drop. It's just waiting for the time. It's at the price, but the time and price runs the markets. So it made the price on the 18th. Now the other 10 days is bull crapping until January 1st, when it's going to start dropping. It's going to make a new candle that drops. So in my opinion, it doesn't matter how long it takes. The only thing that matters is that I get into the trade based off my proper signal. That's the only thing I can control. Now, you can control how long you hold it, but for me, once you get your account flip or your 100 pips or whatever you're trying to get, you might get out. You might get out right here at 128 pips or 114 pips. I might hold it this entire move, depending on how fast and how far it drops. Or I could trade the drop and the pullback, and then I can get in for a bigger lot size for the next drop, and then I can trade the pullback. It's 1,000 different ways to skin the cat. And I think experience will guide the trader. But I think if you understand the bigger picture, then maybe you can just trade 100 pips at a pop until you actually see it and you live through it once or twice. Once you see it, then you'll never, ever be able to unsee it. You'll always kind of understand what type of opportunity you have. Like when we traded the JPYs up last year, we had such a beautiful entry. Y'all remember that? Those of y'all who traded the JPYs last year? Yeah.
Yes, I remember.
Yeah.
Yeah.
We got in at a great entry. And
Perfect.
I think we just didn't hold it. You know what I'm saying? It's one of those things to where you've lived through it, right? Like because you lived through it and you saw how that market just look at the market just ran. So we could have got in on that January 2nd day like we did, and not traded it again. We could have just took profit in July 1st, bro. I mean, that adds perspective to your trading. And then a lot of us caught this drop. Maybe you didn't catch it all the way back down to where it was. Maybe you only caught bits and pieces of it. But that also adds perspective to your trades, because those of us who saw it, who actually lived through this rise, and then we lived through that drop. I mean, to me, that changes everything as far as trading, like how I viewed it. Because this one trade that we saw coming could have paid for your life for the next 2 or 3 years. This one drop could have paid for your life the next 2 or 3 years. All this happened in the same year, though, 6 months apart. And now here we are again. So let's just say that we get into a trade that we can ride for 6 months again. Or let's just say you rode that trade for 3 months. That 3-month ride could pay your salary for the whole year. To me, that's everything as a like that is powerful. That's powerful. And I think that we will definitely be able to capitalize on these trades at least for 3 or 4 months. Maybe you don't have the willpower. Maybe you don't have the knowledge or the understanding to hold it for 6 months. But you can hold it for 3 months. You can hold it for, if you're going with the order block, is going with the trend the way you see the trend. Man, this is limitless. And just like Kim sees the EC trade different than I see it. So maybe that's not a great trade for me. Oh man, Kim don't see it the same way. But me and Kim might see the GU trade the same way. Maybe I'll just ride GU because I see it. It's an easier setup. Go beat up the little kid and take the little kid's candy. Don't fight Tyson over a piece of candy. So that's all I'm saying. Whatever trade looks the best. It might be gold. It might be US 30. It might be Solana. Go get the easy trade and sit in that trade. Bruh, who sent me that? Leandra, I think you might have sent me that thing with QB Stu. How he was up like $100-some thousand on his crypto trades. Was that you that sent me that? XR?
No, I don't think so.
Okay, somebody sent me a Forex beginner podcast with this dude named QB Stu. And he's up on his Solana trade, not Solana, XRP trade. He got 30 lots on it. And it was a trade that he had been waiting on, that he had got into prematurely a couple of times. And now he caught it. It just takes one trade. What's your boy's name, Leandra? The ICI dude.
Well, no, that's TT's boy.
But still,
What's his name?
You know who I'm talking about? Yeah, crazy black dude, look like Juice WRLD.
Yeah, it looks like the rapper, doesn't he?
Yeah.
I just call him ICI guy. I don't know.
Yeah, but he made 11 million.
11 million.
Trading nice, crazy. But we don't ever have to make that amount, right? You don't have to over leverage. You don't have to do anything crazy. What you can do, you can make $10,000 trading properly, with the proper leverage, right? You can make $5,000. You can make enough money to buy your ticket to Thailand and live on $150 rent, $200 rent, trading the right way. What I'm trying to get people to understand is our opportunities are here when you're at the beginning, right? This is at the top or the bottom of the market for these pairs. Now they got to take that long journey to go back up or go back down. Look at these long range charts. Price for these, look at this JPY chart, bro. Bottom, top, bottom at the same place, top. We're getting here. We'll get here this week. We'll be at the top. Y'all don't have to listen to me. Look at the freaking chart. You either believe this stuff or you don't. Bottom, top, we at the bottom. When I first met Kim's favorite thing, I only trade the edges. I only trade the edges. This is the edges. This is the edge. This was the move from the bottom to the top. We at the 78, bro. Like, y'all, you can't make this stuff up. You either seeing it, or maybe you don't have the experience to understand that what type of signal this is. Back, Sean, when were we talking about Tesla, Sean?
I don't know.
April.
We talked about this because of this, y'all. This is what we were talking about back when on this Tesla chart. We had this push up, we had the pullback at the 78. And we had missed the actual hit. Sean did, but we had missed the actual hit at 78. But it had pushed up again. And we were saying, man, you can get in here and ride the trade up. This is, listen, it's going to be funny because here in a couple of months, here in a few months, we're going to get on the call. I'm like, y'all remember back in January at the end of the year, we talked about this being at the 78. Bruh, this is it. This is your signal. The market has pushed all the way up and pulled all the way back at your 78 with the bullish OB at your daily. Bruh, if you don't believe this, there's nothing I don't want to be the one trying to convince you. You're either a trader or you're not a trader yet. You're somebody who's still struggling, which is cool. But for me, you can't have it both ways. You're trading based off of something, or you just trade because somebody else is telling you what they think. In this particular chart, it's not set up as beautiful as the GU chart, in my opinion. To me, I would rather take that GU trade because I see it. It's an easier trade for me. But it's not to say that this trade won't happen. I'm just telling you, you have options as a trader. You have your options. And your options should be based on something. Whatever that thing is that you're basing your trades off of, it needs to be something that's consistent and something that makes sense. It doesn't have to be consistent or make sense for me, but it needs to be consistent and make sense to you, right? So if I'm looking at this market that's pushing up, and basically you get a push up and a pull back to 78, and then you explode up to these highs, right? You make a high, you go above that high, and then you go back down. If we don't break this high, to me, we breaking back low. And it makes sense because this push up broke this high. Now we probably need to come back to the imbalance to go higher, or we need to come back and break this low to go lower. But that's how I see the market. I'm not asking you to see it like I see it. Your experience shows you the way you see it. But all I'm telling you is these markets have ebbs and flows to them. They have patterns, they have timing. And right now, January 1st, this is the beginning of a new year, and we're in either a high or a low of a market cycle. So you can figure out what that is and what that means to you, but the markets, they go from one high, or they go from a low to a high, and then from a high to a low. So when you spread your chart out, you need to be looking to see where you are in that cycle. Did we fall down? Did we break a low? Did we pull back up to the zone we need to hit? Are we going higher, or are we going low? And I think the best way to do that is through your long range charts. I think the long range charts kind of give you a better picture of what you should be looking at or could be looking at over the next couple of months. And then if you just trade in that direction for those next few months and to the next long range chart is published, I think it allows you to keep up a lot easier. At least it has allowed me to do it. Any questions? No questions. So everybody know what they trade this week? Everybody got their trades. Is your show. Y'all don't have y'all trades, this pullback might be a beautiful thing. It might get your account right, over the next few weeks until you figure it out.
Sweet.
Hey, Leandro, I think Sean called you a simp.